Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Preparing for an Upcoming Retirement. Mike, what kinds of things do people need to look at to know whether or not they can undertake a successful retirement?
Yeah, I mean, first steps first, we talk about your income sources in retirement versus your expenses. And usually the easiest thing today is to look at what are my income sources now, how will they change, and what are my expenses now, and how are they likely to change. On the expense side, oftentimes it's not that big of a change, but I think that's the first starting point before getting into more complicated things such as my investment portfolio, my health insurance situation, or Social Security strategies.
Mike, a lot of times people are concerned about whether they have enough to live all the way through retirement, and so they might delay their retirement significantly. But it's also worth pointing out that sometimes the biggest risk is not retiring early enough, and you might miss out on some retirement years that way.
Yeah, I mean, look, we all do get worried about longevity, and there are plenty of warnings out there in the media about how Social Security or these other things might not keep pace. But man, it sure is devastating to see the opposite one, where you work your whole career, work your tail off, save all this money, and it can impact your health. It can impact all sorts of things. And to not get to enjoy that full retirement because you choose to work longer than you might have needed to is so much more frustrating.
Our guide this month is titled Preparing for an Upcoming Retirement, and there are two ways you can request it. The first is by calling 800-393-4001. The second is by going to ArmstrongAdvisory.com. That phone number again is 800-393-4001, or you can visit ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker with you here, and the big news that was moving markets overnight was obviously the Israeli retaliation against Iranian attacks from last weekend. And the best way that I can continue to describe this is by saying that at every juncture, Iran continues, again, in the last, 2 to 4 weeks, Iran continues to act like the guy yelling, "Hold me back," while no one's holding him back. And what I mean by this is, first, let's put a few things together. Last weekend, they send, I've seen different reports. I don't know if we've ever settled on a final number, anywhere from 300 to 500 drones, ballistic missiles, and other
rockets, other stuff into
at Israel.
Yeah.
Almost they told Israel and the United States about it 72 hours in advance,
right,
that it was going to be coming, giving them a chance to defend themselves.
They told the United States and everybody that it was going at Israel, not going to be directed at any U.S. military bases or UK or anywhere other than Israel.
Which you don't do if you're actually serious about, hey, we want to cause meaningful damage.
Yep.
As a result, I believe that 99% plus of the different drones and missiles were intercepted. The only known casualty that I've seen was a 10-year-old girl that had to get taken to the hospital. I don't know if she has survived or not.
Yeah.
And that was from debris related to one of the missiles being destroyed. Yesterday, or rather last night, I guess, and then immediately after, by the way, Iran says, we now consider the matter concluded. They're like, guys, we're done. We're not doing anything else. Israel takes about a week and strikes back. It's unclear exactly what they sent. We don't have any information on this because Israel did not publicize this, unlike Iran. And so we don't know exactly what it was that was sent. We don't know if it was drones, missiles, something else. We don't know. But struck targets in both Iran and Iraq, from what I gather, as well. Iraq, not Iraqi targets, but Iranian ones in Iraq.
Yep.
And Iran has pretty much said, hey, we were able to, intercept everything, and
everything's fine here.
We consider everything fine, and we're not planning anything else.
Yeah.
So again, Iran basically saying, guys, please, don't do this again. We're done. We're sorry. They can't say we're sorry.
Yeah.
But the Iranian government is, quite honestly, it seems somewhat terrified. And part of that is because it does actually seem like the Israeli attack yesterday may have done some damage, and that Iran might not have been able to either detect or shoot down what was coming at them. And so I think Israel was pretty much sending a reminder, both in this and with the consulate attack a couple weeks ago, saying, guys, we have really good intelligence on all of this stuff. We know what you are doing and when you're doing it, and we have the capability to strike you in ways that you can't stop. Let's not go down this road because it will end badly for you, is the message that Israel is trying to send. And Iran is pretty much saying, yep, we get it. We had to do something last weekend because we had to do it, but we're done. That's the message that Iran is sending publicly, at least. So you saw this fascinating move in markets yesterday. Again, to tie it back, we're not, geopolitical. We don't.
Yeah,
geopolitics is not the focus of our show. No,
expert.
it's not what we do. But what I do is I look at markets pretty much from the moment I wake up until the moment I go to sleep, which is not the healthiest way to live, quite honestly, but it's a life. And here's what I saw: is when I went to bed last night, S&P futures were down 1.75%.
Oil prices were up.
Oil prices were up 3%. Woke up this morning, oil prices down 0.5%. S&P futures down 0.25%. almost completely reversed once Iran had announced, guys, we're good. We're not doing anything else. Now, they still may continue to act through proxies as they have for years, but this obviously has been the first direct confrontation between Israel and Iran, I believe, since the Ayatollahs came to power back in the 70s. So like this is unfortunately historic stuff that we are seeing, but Iran also now kind of like, we're good. Please, we're good.
So I think there's, at least in my view, a few different ways to read this. One would be the one that you're pointing out here, which is seems on the surface as of this morning, which this can change very quickly, but as of this morning, it certainly seems like de-escalation is the goal between these two countries. The other piece that I guess just goes in the back of my mind is, from an investor perspective, if you've been worried about geopolitical tensions anywhere in the world over the last 2 decades, what's been the right approach, Chuck?
When the bullets start flying, you start buying?
Ignore them, basically, right? Like, ignore the risk of geopolitics, because whether it's been Iran or North Korea or tensions with China, like, nothing has bubbled to the surface. And so the investor lesson has been, unless there's actually bullets flying and you can prove that there's going to be an impact to the market that you're worried about, then don't worry about it, because everything's de-escalated. And that, to me, I guess, I wonder if that is baked into investor sentiment, investor practice, to say, hey, we don't know if there's going to be anything real here, so just don't take it seriously until it is very serious.
Even when things do get serious, it's not inherently bad for markets.
Right.
That's the unfortunate truth. Is as much as we are human beings, what we talk about here on this show is how markets react to these events. And ultimately, it's not something where you notice any even intermediate term issues that relate to real conflicts that have actually occurred. You think about the major drawdowns that we have had in the last couple of decades. I'm going to go and just pull up a chart just so that I can, actually accurately. Should we do 1 decade or 2 decades?
You can go 2 decades. So 2004 through now?
Yeah, let's go 2004 through now. And I'm going to pull the S&P 500, and let's go back to 1/1/2004. We're doing this live, so I have no idea what I'm going to actually find. I'm going to do drawdowns of 10% or more, because 5% drawdowns, honestly, not worth talking about.
Yeah, they occur too frequently.
Let's see. 2008. Was that related to any kind of international conflict?
No, it was entirely a U.S. banking crisis that sunk the entire global financial economy.
Correct. It was the bankers who were the problem, not the soldiers. 2011. Almost 20% drawdown.
Yeah, to my
European debt crisis.
To my understanding, that was not caused by the Syrian civil war, which was ongoing in 2011.
Correct.
Nor tensions in
No,
Libya.
I'll give you a hint. It was Greece.
Yeah.
It was the Greeks had too much debt, and Europe didn't know what to do. And eventually they figured it out. Let's see. 2015. Conflict?
India and Bangladesh had a border skirmish.
No, this was China devaluing the yuan unexpectedly in August.
Right.
2016, January. Conflict?
No.
No, it was Russia deciding just to flood the market with a bunch of oil, which in turn crashed oil markets and a lot of other, made the high-yield debt space fairly toxic for the next year or two. Let's see, what else do we have here? 2018, twice. 10% correction, almost a 20% one at the end of the year. Conflict?
Did it have anything? No.
No, Jay Powell said, hey, we're staying the course on raising interest rates. And then the market said, no, you're not. And Jay said, oh, you're right. I'm not going to raise interest rates anymore, actually.
Was 2018 around the same time everyone thought Brexit was going to end the world?
No, that was either 2016 or 2017.
Okay.
Which again,
didn't. Again.
Did the world still
functioning?
Unless I'm in the simulation and my brain is just in the vat, we're still here. 2020, March. Conflict?
Kind of, but not any conflict between countries.
You can make a case that the Russian invasion of Ukraine exacerbated the inflation problem.
But it wasn't the root cause.
But it was the inflation problem that drove markets down,
Yeah.
not Russia invading Ukraine. Let's see. What else do we have? Oh, last year we had a 10% correction from July through August, or July through September, I'm sorry.
Nothing to do with geopolitics.
There literally, I don't think there was anything new that sprouted up of any kind, any note there. It was, hey, the yield on the 10-year Treasury went from 3.5% to 5%. Okay, that didn't feel too good for markets. Mm-hmm. So we've looked at the last 20 years now of 10% plus drawdowns, and not a single one of them has been related to a conflict. Now you might say, okay, Chuck, that's just, that period in time. What if we look at, anything before then? So yeah, let's take just a quick look. I won't take up too much time because, we got to get to break eventually. I know Tucker's like, come on, man.
I'm not at that point yet.
Okay, let me know when you get there. Just, give me a
you'll
signal
know.
or something. I know, I always do. Let's see. Okay, here we go. Outbreak of Operation Desert Storm in 1990. Markets did see a 15% drawdown, which was recovered in a month and a half.
9/11?
I'm not there quite yet. Let's see. 1998. Long-term capital management blows up. Not because any military force attacked it, but because of the Asian currency crisis. Again, not militarily related. 2000 through 2003. Tech bubble bursts. 9/11 happens in the middle of there. I don't know if markets would have been better or worse, had that not occurred. I don't think I can possibly say, quite honestly. Probably contributed, but look, things were set in motion a full year before. The 10% correction on the S&P 500 was in place by December of 2000, a full year before. So I'm not going to ascribe this to 9/11, and then we're right into the financial crisis afterwards. So the only one that you can maybe point to is, hey, there was a short-term issue because of this, was Desert Storm in 1990, and that was partly because, just the scale of it. I mean, you had 500,000 American troops, and there were concerns that this was going to be a massive conflict given the size of the Iraqi forces at that time, and also what happened to oil prices short-term was a shock for the market too. But other than that, in the last 35 years, any military conflict that's happened has not been material to stock prices in the short term or long term. Let's take a quick break here, and when we return, we will talk a little bit about just how markets have been moving and where they go from here.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
If you're one of the millions of Americans at or nearing retirement age and you don't have a solid plan, it may be difficult for you to enjoy your retirement years. Hi, this is Chuck Zodda from the Armstrong Advisory Group, and I've got some questions for you that may offer some guidance as to whether now is the right time for you to retire. Can you retire? Do you have enough money to live the way you'd like to? Should you retire, or have you exhausted your time in the workforce? Regardless of the answers to these and other questions, our new guide called Preparing for an Upcoming Retirement can provide some insight that may help you make the right decision. Call 800-393-4001 to request your free copy of the guide and get a head start on building your retirement plan. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us help you secure your financial future. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
Get up-to-the-minute market updates with Wall Street Watch, weekdays at 10:30, only here on the Financial Exchange Radio Network.
The Financial Exchange has built an incredible partnership with the Disabled American Veterans Department of Massachusetts. We can't wait to take part in this year's DAV 5K, set for Saturday, November 9th. At Fort Independence on Castle Island, and registration's now open. You can help our great American heroes by walking, running, or simply making a donation. Your gifts will support services such as the Veteran Advancement Program, which offers permanent and affordable housing opportunities for veterans and their dependents. Learn more at dav5k.boston. The DAV 5K Boston is presented by Veterans Development Corporation.
Piece from the Bloomberg today. The title is, Bank of America strategists say rate jitters are fueling stock outflows. Maybe. I don't know. I'm sure it probably contributes at the margin somewhere. But...
Well, actually, this is an interesting one to me because frequently, I think when there's a lot going on in the world, like there is right now, there's geopolitical tensions in the Middle East, there's trade tensions with China, and then there's also interest rates. And if I were to let's just look at the last 2 weeks, Chuck, because a lot of those tensions have been built in at the same time. If I'm going to pick one driver of maybe not the outflows, but market sell-off over the last 2 weeks,
sure,
I'm pointing towards interest rates. You?
Interest rates have been going up all year. Why are equities selling off now? That's my counter.
I think it would be on the expectation of cuts that has just been eliminated over the last 2 weeks.
But interest rates have still been going up all year. You know, we started the year as an example. As of December 29th, the 10-year Treasury closed at 3.866%. Now, this sell-off in the S&P 500 has been going on since we peaked on March 28th.
Okay.
On March 28th, the 10-year Treasury closed at, 4.206%. So yields rose 0.4% over the first 3 months of the year, and stocks went up with them. We've now had yields go up an additional 0.4%, so the same amount as the last 3 months, and stocks are down 5%. So if it were just yields, in my opinion, I don't know that there's any there. Is kind of where I land. is it maybe a contributing factor? Sure. Like, I can buy that. But the counter to it is on April 10th, 10-year Treasury opened at 4.366% and closed at 4.54, almost 20 basis points up.
Yep.
That was on April 10th. I'm just cycling between a couple places. April 10th, the S&P 500 lost 7 points. You know, like yields went up almost 0.25%, and the S&P kind of shrugged and went, I'm good. That was a nice bump. We're fine.
So I guess a confluence of factors is the answer.
Yeah, I just, if it were yields, you'd be able to point to, because back in 2022, you literally could point to the days you'd be like, yields went up by 0.25%, S&P was down 4%.
Yeah.
Just whack, 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 whack. Like, that was the story all year. This, do I buy that higher yields could be influencing it? Sure, like, I do. But it's also important to note that this sell-off really started April 12th, which is last Friday. You know, before that, the S&P closed at 51.99. It was less than 1% off its high.
Yeah.
And if we look at what yields have done since last Friday, they are almost completely flat, up less than 0.1%. So I don't think it's yields, because yields haven't actually moved since the bulk of this sell-off happened. What is it? I don't know. People got bored hitting the buy button, and now they want to hit the sell button. I try not to
attribute markets to any one thing is dangerous.
There's so much that we don't know because we can't see it. You know, someone is getting blown out of a position in, you know, whatever, and so they're having to liquidate a bunch of other stuff as a result. You know, you remember that during the meme stock days, the crazy stuff we were seeing where it was like, hey, you know, someone's getting blown out of a short position in AMC or GameStop. And so they're selling all their long positions in other stuff in order to cover it and not get slammed everywhere. So I don't know. I try to look at, hey, what can, you know, what's an investable theme for, you know, 3 to 6 months? As to what happens on, you know, a weekly basis or a daily basis, I'll be completely honest. I don't know, and I'm not sure how many people do.
That's fair. Yeah, I think there's been a meaningful shift in terms of inflation expectations and rates over the last 3 months, but it hasn't. You can't look at it to explain the market activity in the last week and a half.
Right, because the 4% out of the 5% sell-off that we've seen has been since last Friday. And if you do want the theme that's been on everyone's mind since last Friday, it's the Middle East.
It is.
That's what everyone's been talking about. So maybe it's that. I don't know. Let's take a quick break here. When we come back, we got Wall Street Watch, and then we're talking Netflix earnings after this.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
If you're thinking seriously about retirement, now's the time to build a sound plan that will help you enjoy your later years. This is Mike Armstrong from the Armstrong Advisory Group, and if you're one of the millions of Americans at or nearing retirement age, it's important to understand how to develop this plan, and our new monthly guide may help. In it, we discuss strategies to prepare for an upcoming retirement. We'll walk you through the process of putting together a retirement income strategy, exploring your healthcare options, and managing potential financial risks. There's also the crucial issue of maximizing your Social Security benefits. Call our office today at 800-393-4001 and get your copy of this new free guide, Preparing for an Upcoming Retirement. That number again is 800-393-4001, or you can request it from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
If you served in the Marine Corps, by now you know about the contaminated water problem at Camp Lejeune. If you were stationed or worked at Camp Lejeune from 1953 to 1987, you probably have a lot of questions. We have some answers. You could be entitled to compensation. Billions of dollars are being allocated to pay for damages to anyone stationed at Camp Lejeune during that time. Unfortunately, it appears that officials may have known the contaminated water problem existed and did little to protect their men. The Semper Fi code was not honored. If you or someone in your family has developed a serious illness, including various forms of cancer, call this Camp Lejeune legal support line right now. You can't turn back the clock and change what happened, but you can certainly call right now and learn your rights as a Marine. Here's the number.
800-477-1736. 800-477-1736. That's 800-477-1736. Paid for by Legal Alert Line.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about your brand new guide, Todd, how to leave assets to your beneficiaries. Todd, how can you ensure that your kids' inheritance can be protected from future divorces?
Well, estate planning, as you know, does things like avoid probate, protect assets from nursing homes, and reduce taxes. But you know what? The family behind the estate plan can be more important. And so the trusts live on after you die, and you can have language in there that divides the assets to the children, but doesn't just pay it out, right? It holds it in trust for them and allows them to be trustee, but just not take it. In order to get it, they have an independent trustee that can say yes or no. And that way, by not owning the asset, if they get divorced down the line after you're dead and the other side says, hey, I want half of what's in that trust, you're going to say, that's great, but you have to ask the independent trustee. So it's now not going to be available to you. And more than just the ability to say no, it's the fact that you don't own it. So if you don't own it, it's not a marital asset to begin with, so it should not be even subject to the divorce. So learning how your trust works after you die can oftentimes be more important than when you're living, and it does more for you after you die than when you're living sometimes.
The estate planning experts at Cushing & Dolan have been helping families like yours for more than 30 years, and they've written a brand new guide called How to Leave Assets to Your Beneficiaries. To get your free copy of this comprehensive guide that will help you determine the best way to leave assets to your family, simply call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are in mixed territory as traders monitor developments out of the conflict from the Middle East, as well as a new flurry of first quarter earnings results. Right now, the Dow is up by 0.5%, the S&P 500 is down by 0.25%, and the NASDAQ now off by nearly 1%. Russell 2000 is up by nearly 0.5% or 8 points. 10-year Treasury yield is down by 2 basis points at 4.62%. And crude oil up 0.5%, trading just above $83 a barrel. Procter & Gamble reported earnings ahead of the open this morning with mixed first quarter results, beating on earnings but falling short of revenue expectations. However, the consumer products giant did lift its full-year earnings outlook and maintained its sales growth forecast. Procter & Gamble shares down by about 0.2%. American Express also posted first quarter results this morning, where the firm saw its revenue jump 11% to $15.8 billion above street forecasts. Amex noted it saw more consumers opt for its premium credit card offerings and said it anticipates full-year revenue to grow as much as 11% compared to 2023. Amex shares are up by about 3%. Meanwhile, Tesla shares mostly flat following news that the electric car maker is recalling 3,878 Cybertrucks to fix an issue with the accelerator pedal. Paul LaMonica of Barron's will join us later at the show at 11:45 to further chat about Tesla. Elsewhere, Ulta stock down by 2.5% after Jeffries downgraded the beauty chain to hold from buy, citing mounting pressure from competitor Sephora, as well as a lack of newness as two reasons for the change. And Morgan Stanley upgraded Shopify to overweight, noting confidence in the company's growth potential and operating leverage upside. Shopify shares up by 2%. I'm Tucker Silva, and that's Wall Street Watch.
I know that Paul's going to join us in our second hour to talk about Tesla.
But you just can't help yourself?
I understand how the problem happens because when you're on that kind of cutting edge, things like the gas pedal, they're hard to do right.
Yeah, it gets sticky, you know?
Did you guys see what the problem actually is?
No.
So the gas pedal in the Cybertruck, it's your normal, piece of rubber or plastic or whatever that sticks up from the floor. It's covered with a metal, I don't know if it's aluminum or steel or whatever, sheath. The sheath has been breaking loose from the pedal.
Oh, problem.
And getting stuck in the footwell.
I could see that.
Such that the accelerator is stuck down no matter what you do.
And that's like a cosmetics look.
Right.
I get that that's dumb, but I'm trying to think through like other really dumb recalls that have had to occur.
Toyota had another one. Remember their EV, the BZ4X or whatever it is? Where they're like, hey, the wheels are falling off. It's like, guys, you're making a car. You got to make the wheels stay on.
How about airbags that accidentally deploy shrapnel instead of bags? Or both, I guess, in some cases. Like, that was a pretty bad one.
I mean, look, all these are bad.
Steering wheels were falling off GM cars at some point, I believe.
They had a steering wheel problem?
I think so, yeah. I'll have to go check my notes on that one. But,
what was the one that they had before Mary Barra took over? They had something else. It wasn't the steering wheel fault. They had something bad where it was like 160 deaths or something like that.
I think it had to do with a similar gas or brake issue.
What was it? I'll have to dig around. It was like 10 years ago now, but I remember it was a huge problem before Mary Barra came in, and she kind of turned the company around.
Oh, the cars were like inappropriately accelerating or something, wasn't it?
There was something. I can't remember exactly what it was.
I've seen there was an ignition switch recall in 2014.
That was it.
800,000 of its small cars.
So you turned the car off and it would continue driving?
I can't remember.
Faulty ignition switches, which could shut off the engine while the vehicle
was shut them off while you were driving.
So you'd lose power steering, you'd lose power brakes, you'd lose power everything.
There were 124 deaths because of it.
Yeah. So again, is this stupid on Tesla's part? Yeah. You want to make sure the gas pedal works. I don't know that it's any fundamentally dumber than other engineering issues that have occurred at other
It's not an engineering issue. It's something that they put on the gas pedal to make it look cool, which makes it dumber in my opinion.
Yeah. Okay.
Like something being mechanically wrong is bad, but this is not something that you're doing where you're. Here's an example. Tesla has on the model, whatever it's called, the Cybertruck. One of the things that is cool potentially is that the steering is all steer-by-wire. The steering wheel does not mechanically connect to the front axle at all. It is the only... I think there might have been one other car that's tried this previously, but it's entirely new, and it potentially has huge savings in the long run if you can grow this to all your other vehicles, because then you don't need as many moving parts.
Yep.
So this is something that has the potential to be revolutionary. If there were a problem with that, I would look at that and say, that's bad, but it's also something where you say, okay, there's something new that they're trying, and here's how we need to build the guardrails on this.
Sure.
Because they're trying to functionally improve the product.
Yeah.
Putting a metal sheath on a gas pedal that falls off is not fundamentally improving the product.
least it's not an expensive fix, seemingly, right?
No, have you
just
seen
swap out the pedal without that?
No, what they are literally doing is they're just putting a rivet through the metal to secure it to the pedal.
So they really want that piece of metal on the pedal.
And then they're saying that they're redesigning it so that future versions won't have this issue, but it's literally a rivet that they will put through the metal to hold it to the pedal.
I feel like I can fix that at home. Just a good screw gun, I'll be fine.
No, you need a rivet. Listen, I don't know. Let's talk Netflix now. Netflix reported earnings after the bell yesterday. They beat on both revenue and on earnings pretty significantly, quite honestly, on the earnings side of things. Revenue was up 15% year over year. Their profit was up almost 80% year over year. And so you had, again, a really nice quarter from them. But the shares are currently down about 6.5%.
7.5 now.
7.5 now? Yep. Okay, there you go. And the big thing that I guess you can point to is that their guidance for the upcoming quarter for revenue and profit a little bit weaker than anticipated. And they announced that they are no longer going to be divulging subscriber numbers in their quarterly reporting.
Yeah, so it was definitely a guidance issue because, to your point, they grew subscribers the most recent quarter by 9.33 million. I think they were expecting to do half of that. So big beat this most recent quarter. But if the company that has previously been telling you all about subscriber growth every single quarter is telling you as an investor, we no longer want to highlight that. We are no longer talking about it.
Slower growth is coming.
There's only one reason you would do that. Yeah,
yes.
Slower subscriber growth is coming, and we're going to focus on profitability instead. That's all they're telling you, right? Is, hey, we are not going to. We already have 500 million viewers, I think, is the total number of subscribers worldwide at Netflix at this stage. We're not going to be able to meaningfully
250 million.
Quarter?
269, I think, was the
total?
Yeah.
Okay, my mistake. We're not going to be able to meaningfully grow that on a percentage basis going forward, so we're going to do things like start hammering away at advertising to try and grow profit instead. I'm not sure investors love that idea, and that seems to be a lot of the pullback.
The question is going to be whether or not they can deliver on that stuff. It's no different from remember when Facebook first went public? I mean, back when they were still Facebook and not Meta.
Yeah.
And there were the questions about, hey, are they going to be able to pivot to mobile? That was the big question for Facebook back in like 2012, 2013 is, hey, are they going to be able to do mobile? And
people won't want to look at Facebook on their phones.
You look back on it now and you're like, man, we were dumb. Mark figured it out, you know? I think that when we look at this, the question is going to be, can they figure out the advertising market?
Right.
And I'm not really going to bet against a company like Netflix on that because they have so much data on what people watch. They have content for pretty much everyone. Like, their content runs the gamut from kids shows up to,
realities to
shows from
Oscar-winning
Korea
shows.
about people
Sports now.
having to go through a Hunger Games type stuff.
Yep.
They got sports. When's the WWE contract start? Is that this summer? This fall, maybe?
I don't know. I'll look it up.
And for context, by the way, I know I mentioned Netflix stock today.
2025.
7.5%. Okay. Over the last 12 months, this company's gained 75%.
So this is also part of it is, hey, the stock's been on quite the run, and occasionally you have pullbacks and things like that. They are, again, you can say right now, they're one of but they might be the only pure streaming company that's actually profitable. And they're
good question. Well, there are no other pure streaming companies, right?
If you broke out the segments from Disney or Warner Brothers Discovery, I don't think any of those would be profitable at this point based on what those companies have said.
Yeah, probably not.
They're cash flow positive. Trailing 12-month free cash flow is $7 billion. Operating margins are 20%. There's a good business with Netflix. The question is,
well, it's a pivot, Chuck. Right? It's been a pivot from they have done an amazing job of growing users for the last, when did they start their streaming platform? Decade?
I was streaming Netflix back in 2011 at least, so it probably goes back a couple years before that, maybe 15 years. Yeah.
That has been their tremendous focus, and they've been really good at it. Not necessarily at heavily profitable growth, but really fast growth. This is a pivot, and they've been profitable. That's impressive. Will they be able to Not necessarily, you don't necessarily need to grow those subscribers quite as much, but they need to make sure they're retaining them and that those subscribers that do stay are very, very profitable.
And look, here's the thing. It's a valuation story again. You're 31 times forward earnings. Mm-hmm. You're 7.5 times sales. Justify it. That's what the market is going to say to them, and they're going to have to answer the bell.
We forgot gaming, by the way. They're doing that now, too.
Oh, that'll be fun.
Bought a few gaming studios, so we'll see if they make any traction there.
What was it the one that we found that they had? Was it like a Too Hot to Handle video game that they were pairing with their
I mean, this is on the mobile side of thing. Like, you can't just boot up Netflix on your TV and play it. At least I don't think.
No, I think it's all mobile games and stuff like that. Let's take a quick break, and when we come back, we'll talk about really how next week kicks off the earnings season in earnest right after this.
There's only one show that follows Wall Street's continued volatility. Keep it here all morning long on the Financial Exchange Radio Network. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
Beneficiary planning and asset protection go hand in hand, but leaving everything to your kids can be problematic. Call Cushing & Dolan at 866-848-5699 and get their new guide called How to Leave Assets to Your Beneficiaries. Don't leave your future or your children's future to chance. Call 866-848-5699 or request it online from our website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Millions of Americans are preparing for retirement. And if you're one of them, making sure you have a solid plan is the key to enjoying your later years. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and I'd like to ask you two simple questions. Can you retire, and should you retire? Our new guide is called Preparing for an Upcoming Retirement, and in it, we'll discuss strategies that can help you answer these questions and others so that you can make the right decision for you and your family. There are many different elements to a sound retirement plan, including knowing how much income you'll need to live comfortably, when to take Social Security benefits, and understanding what financial risks might be worth taking. Get your free copy of our new guide, Preparing for an Upcoming Retirement, by calling 800-393-4001, 800-393-4001, or you can request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Leaving assets to your beneficiaries is a critical piece of any estate plan. Cushing & Dolan has written a new guide that may help you avoid unnecessary mistakes that can cost you dearly in the long run and ensure that your assets are protected for generations to come. An example? The federal estate tax exemption has increased by nearly $1 million from 2023. That could lead to a larger inheritance for your family members. There are several strategies in this new guide that will help you learn how to make the right decisions about your distributions at the right time. Cushing & Dolan have been helping New England families for more than 30 years. Let them help you too. Call 866-848-5699 and get their brand new guide called How to Leave Assets to Your Beneficiaries. That number again is 866-848-5699. Or you can request the guide online by visiting legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
Peace in Bloomberg. It's time for earnings to prove the bulls right. And yeah, look, this is the story. If you're going to be trading at 20 plus times forward earnings, those earnings better deliver if you don't want to see your multiple compress.
So since the lows in late October, valuation expansion has accounted for pretty much most of the S&P's 23% return. I'm not sure when that's as of that 23%, but pretty much where we are right now.
Sure.
And the price to forward PE ratio on the S&P has gone from 17.3 at the end of October to 20.1. So what's happened? Companies have gotten more expensive. There's two ways to move that ratio back down. Prices fall or earnings go up.
And earnings go up is the one that people like more.
Yeah, generally people aren't in love with the S&P, falling down and then continuing down. So that would be the one that people would like, and we're just getting started here. We will see where the rest of the S&P reports.
The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way, so whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean Paradise is waiting for you, so head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Paramount, who has been involved in merger discussions with Skydance for, I don't know, at least a few months now, I think, is apparently being targeted by a joint venture, I guess you would call it.
Yeah,
joint bid from Sony Pictures Entertainment and Apollo Global Management, who may try to acquire the media company as well. Now, Skydance, if you're not familiar with them, they may not be a household name, but they've been basically producing a lot of Paramount's movies for the better part of the last 2 decades. Dating back to their first one that they ever did with them was, with Paramount actually, was the remake of True Grit back in 2010. But then the Mission Impossible series, Jack Reacher, let's see, what else have they done with them? The Star Trek movies, something called Annihilation. I don't know what that is, but I'm told it's a movie.
Kid show.
The latest Top Gun movie. Skydance has been heavily involved in a lot of these different movies. They are also run. Do you know who the founder and CEO of Skydance is?
Tell me. The Manouche?
Do either of you know?
It's not Manouche.
No, not the Manouche. David Ellison.
Oh.
Do you know who David Ellison is?
Sounds familiar.
Know the name.
He is Larry Ellison, founder of Oracle's son.
Yeah.
So when you're the son of a billionaire, what do?
Start a movie
studio. Like, again, it's kind of stereotypical, but like it's how it goes a lot of times.
I would.
So you've got this. I know it would be great, wouldn't it?
Yeah.
It'd be fantastic. So you've got potentially a bidding war for Paramount, which hasn't really been able to monetize their content fantastically, but there's a ton of intellectual property that's under their umbrella. Again, you've got Star Trek that's in there. Top Gun, as I mentioned, is under Paramount's umbrella. Mission Impossible.
Nickelodeon, Comedy Central, and MTV are all Paramount assets, aren't they?
Yeah, I mean, well, so I'm just talking on the Paramount Pictures side of things.
Understood.
Even. But yeah, if you're looking at the different stuff that is under them.
I'm purely
MTV,
going off-
Nickelodeon, Showtime, Comedy Central, TV Land, CMT, the Smithsonian Channel, which is always one of my favorites. I don't know if either of you watch Air Warriors on the Smithsonian Channel.
No.
Each episode is about a different...
Air Warrior?
I was going to say fighter plane, and it's just, for an aviation nut like me, it's just the best. Then obviously they have their movie group, and then they've got, CBS News and all CBS Sports and all that stuff as well that is under their umbrella there. But I think the question is, hey, can you figure out how to make money on this? Because in 2023 they lost $451 million, which is a problem.
Sony doesn't have any sort of streaming platform out there. I know they produce a lot of movies, but I don't think that they have any sort of dedicated streaming.
I'll be completely honest, have largely forgotten about Sony as a company.
Yeah.
Which is kind of shocking to the company that was probably the most relevant media, entertainment, and even media hardware company.
PlayStation 5?
Yeah.
That's all you know them for now. What else do they do?
The headphones in your head?
How old are they?
Pretty old.
Yeah. I do hear, actually, that the new Sony TVs are fantastic. But they'd kind of dropped off for a little while. So we'll see if they can make a run at it. Quick break here, hour 2, coming up in a little bit. Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Preparing for an Upcoming Retirement. Mike, what are some of the things that can derail a retirement that otherwise would be going fine?
I mean, there's all sorts of items. Certainly, a pension going bust or Social Security getting reduced, people worry about. Certainly, we all worry about market volatility and the risks there, or inflation. But one of the ones that I think people almost intentionally avoid is the risk of increased healthcare costs. I think we're familiar with Medicare costs and things along those lines. But the portion of Americans who will face some sort of heavy end-of-life care and the costs associated with it, it's a big chunk of Americans, and gosh, it's such a taboo issue that we hate talking about and being transparent about. And so you really have to tackle that one and be straightforward with the potential risk.
It seems to me that just doing some stress testing with some actual numbers can make a big difference in determining whether or not that can cause a problem for you.
Yeah, most certainly. But the costs of things like nursing homes or assisted living facilities are so frightening to people and almost unfathomable in terms of total cost that we just choose to stick our head in the sand sometimes. And that's not necessarily the wrong approach to things like market volatility. But when it comes to planning out your future financial success, putting your head in the sand is a losing strategy.
Our guide this month is titled Preparing for an Upcoming Retirement, and there are 2 different ways that you can request it. The first is by calling 800-393-4001. The second is by visiting ArmstrongAdvisory.com. That phone number again is 800-393-4001, or you can visit ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it, and your property. If you owe the IRS back taxes or you haven't filed in a while, the tax relief line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to 0. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to 0 due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
This is the Money Matters Radio Network. WBNW 1120 AM and W275 CM FM. Concord, Boston. The Money Matters Radio Network.
Do you use the expensive blue or yellow pills to charge your sex life? Are you thinking about it? What if we can promise you the same results for less than $3 a pill? If you're paying $20 a pill for the other pills, you're getting taken to the cleaners. Our pills deliver the exact same results for less than $3. You'll save more than $16 a pill for the same results. And right now, radio callers will get 44 blue or yellow pills for $120 with free discreet shipping. You can save more than $700 off pharmacy prices. Charge your sex life now and save a ton of money. Call now and get your 44 pills and save over $700 and qualify for free shipping. Stop overpaying and call right now.
Paid for by Steel Man Pills. 800-475-8547. 800-475-8547. 800-475-8547. That's 800-475-8547.
If you served in the Marine Corps, by now you know about the contaminated water problem at Camp Lejeune. If you were stationed or worked at Camp Lejeune from 1953 to 1987, you probably have a lot of questions. We have some answers. You could be entitled to compensation. Billions of dollars are being allocated to pay for damages to anyone stationed at Camp Lejeune during that time. Unfortunately, it appears that officials may have known the contaminated water problem existed and did little to protect their men. The Semper Fi code was not honored. If you or someone in your family has developed a serious illness, including various forms of cancer, call this Camp Lejeune legal support line right now. You can't turn back the clock and change what happened, but you can certainly call right now and learn your rights as a Marine. Here's the number.
800-477-1736. 800-477-1736. That's 800-477-1736. Paid for by Legal Alert Line.
Leaving assets to your beneficiaries is a critical piece of any estate plan. Cushing & Dolan has written a new guide that may help you avoid unnecessary mistakes that can cost you dearly in the long run and ensure that your assets are protected for generations to come. An example? The federal estate tax exemption has increased by nearly $1 million from 2023. That could lead to a larger inheritance for your family members. There are several strategies in this new guide that will help you learn how to make the right decisions about your distributions at the right time. Cushing & Dolan have been helping New England families for more than 30 years. Let them help you too. Call 866-848-5699 and get their brand new guide called How to Leave Assets to Your Beneficiaries. That number again is 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us help you secure your financial future. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker with you here. We got markets mixed today, largely on the back of the NASDAQ selling off most heavily, now down about 1%. 151 points on the NASDAQ. Dow is up 162 points, about 0.5%, and the S&P somewhere in the middle. You know, it's kind of that, here's the thing. We always talk about something being Goldilocks, but it's actually not Goldilocks. It's actually the baby bear. Because Goldilocks tries all 3 bowls of porridge, and the one that's always right, whether it's the porridge or the bed or whatever, is the baby bear. So, we talk about how we're looking for, Goldilocks conditions in markets or the economy. You're actually looking for baby bear conditions.
Got it. So,
we're going to rebrand.
I don't like that.
Why?
People are going to be really confused, Chuck. We're going to have to steer them this way every time.
When you say, this is the Goldilocks economy, what, she's lost in the woods looking for her home and then she goes and gets almost eaten by bears? No, you're looking for the baby bear economy where it's just right.
All right, fair enough.
And that's the other part of Goldilocks that you have to remember is that almost gets eaten by a bear. I don't think that's the kind of economy any of us really want.
True.
Just to jump out the window in order to flee.
Yeah.
So, markets are mixed today. The S&P I never finished, but it's down 12 points, about 0.25%. 10-year U.S. Treasury down 2 basis points to 4.62%. We got oil back up 49 cents today to 83.22. It was up as many as $3 overnight with news of the Israeli attacks on Iranian facilities. But since Iran has come out and said, yep, we shot everything down and we're good, we're done, oil lost pretty much all of its gains and now is back into slightly positive territory. Gold also up $5.30 an ounce, not a ton of movement there. A Bloomberg exclusive, a Wall Street Journal exclusive, China ordering Apple to remove popular messaging apps from their iPhone store in China.
The more
WhatsApp, Signal, and Telegram among the apps cut from the iPhone App Store in China.
I'm shocked that these things existed in the first place. That's the more surprising piece of this to me was the news that you could actually utilize WhatsApp in China. This is an encrypted messaging software.
This has major implications for one of my fantasy football leagues, actually, because 2 of the participants are in mainland China. And so I'm not sure how we're going to communicate during the season. I don't know what we're going to do, actually.
Gmail?
I don't know if they have that. I don't know what actually works at this point.
Quite frankly, I'm not surprised that China has gone and done this. These are... Again, if you're not familiar with WhatsApp, it's now owned by Facebook, has been for, 6 years maybe.
I think close to 10.
Is it?
Yeah.
And, it's an end-to-end encrypted messaging platform. And so if the Chinese government didn't feel that they could easily capture the message traffic going on in it, I'm just surprised it took this long for them to ban it.
What do you think it would take? Just a hypothetical that I have to ask it. What would be the ask from China to Apple where Apple would say, no, we can't do that?
I don't know where that limit is,
Which is...
Because they had no problem with this.
No.
say what you will, Microsoft at least got to a point where they said, you know what, we just can't run LinkedIn in China anymore.
Right,
We're pulling out.
Well,
this is ridiculous.
Well, they got to that point after it became public that China was asking Microsoft to remove references to Chinese politics outside of China.
Yeah.
So that was like, okay, like we can't do this.
I guess that would be it. Would be if China was demanding some. I don't know what format this would take. Maybe Apple TV. Like, hey, no, I don't think that would even do it. If China took issue with a program that Apple was considering producing, I think that Apple would censor it.
I suspect that China already has, and we just don't know about it.
Yeah.
No, like I think they are. Like, I think that's already happened.
Yeah.
I'm sure that there are apps that Apple has produced where they've had input from the Chinese government on what is and what isn't okay.
Yeah, the media one seems like the most likely to me of saying, okay, yeah, we're going to allow China to influence control over what even Americans view on Apple TV Plus.
China definitely does that.
Yeah. Yeah, because movies don't get produced if they... What was it? Top Gun, the Taiwan flag was a big issue, right?
Right, and finally Paramount was like, screw it, like we're not going to release in China.
Yeah.
But it was a whole thing because the original trailer, they got rid of the Taiwanese flag on Maverick's coat, and finally they were like, no, like we can't make all of these edits, this isn't going to work, and so they just put it back in.
Yeah.
But yeah, I mean...
So I don't know that there is a line, Chuck. I'm struggling to come up with what the line would be.
It's problematic. Yeah. It really, and I say this as someone who, again, I own a ton of Apple devices, but I don't know, the further that I go, I just kind of start to feel worse about everything related to technology. Like I can see the appeal to being a hermit because all of this just makes me feel dirty. Like it's not. This bothers me more than Amazon spying on Walmart yesterday that we reported on.
Yeah. Did Apple TV have Jon Stewart as a host on their platform at one point, or was that HBO?
No, that was Apple.
Yeah. I remember part of the reason he left is because they did not want him to interview Lena Khan.
Yes, they would not allow him to interview Lena Khan. And I believe he said that I think there was something related to China as well that they didn't want him talking about.
Yeah. That's not too great.
It doesn't feel great. And this is...
On the positive news side, I just saw on Bloomberg that Tata, which is like the largest Indian conglomerate, is considering acquiring the company that does manufacturing for Apple. I don't know if that's a good thing or a bad thing, but
Foxconn?
Presumably in India. So
Foxconn India.
No, I don't think Foxconn actually does it in India.
Oh,
yeah,
interesting.
There's a separate small Indian company that Tata is considering acquiring as part of this. And so any signal that I can see that would allow Apple to deepen the ties in India instead of China does come with its own set of problems, but seemingly less bad problems than
I'm telling you,
China.
The U.S.-India relationship, for me, is where it's at.
Yeah. I would love to see it further.
If you can figure out how to deepen that and make that really work, oh my goodness. It'd be such exciting times.
Indeed.
It'd be such exciting times. Anyway, so we've got that, and then also the continued reporting on this about just China doing what they tend to do every 5 to 7 years. Hey, let's just flood a certain market with a bunch of extra, product. And they're doing it with steel right now, and so they got all this unsold steel, and they're just shipping it overseas. And the piece that I said on Wednesday when Paul Lane and I were talking about this is, so the Biden administration is saying, hey, we're going to raise tariffs on Chinese steel.
Triple them.
Here's my thought. Hey, why don't you use this to build a U.S. steel reserve at really cheap prices? If China wants to sell it to you...
If it's a national security concern.
Right, like, because this way you keep it off the open market so you're not killing the other producers, and you buy it up at cheaper prices than you could otherwise. Wouldn't that be the winning move to say, fine, you want to sell us steel that's like 50% cheaper than normal?
The U.S. military will buy it.
Great. Well, it's probably not military quality. I mean, this is probably stuff that you use for, sewers and stuff, not for F-18s.
Yeah, my guess would be it's a whole bunch of stuff that China was planning to use on their continued real estate development.
And then it stopped.
That, by the way, just didn't happen to work out so well. Which also raises an interesting question, which was, I don't know how much of this dumping was actually intended to sink U.S. Steel, for example, versus just complete continued mismanagement of the domestic Chinese economy?
It's probably both.
Yeah.
I don't know how to weight it either.
Right, but like, you have to keep that stuff in mind here, too, is everyone looks... This is where I go to with it, right? Everyone in the United States, at least, seems to look at China as though they are this insurmountable, thoughtful government
they're not
of
geniuses.
how they are going to overrule the rest of the world order. And like, no, they continually prove that they can fall victim to the same things that most communist and not really communist, authoritarian regimes fall victim of. In the Soviet Union, it was whatever size 10 shoes that they over-manufactured. In China right now, it seems to be steel.
So if I were run the show, I'd be like, look, I'm not going to raise tariffs on this. I'm going to buy it up really cheaply. I'll keep it from getting to the global market, and I'll just buy the stuff and store it somewhere. Now, again, there's
probably take an act of Congress, which isn't going to happen.
Yes, I'm sure that I can't just walk up to a port as president and say, yes, I'll take 6. I'm sure it doesn't work like that, but it'd be interesting. The other thing, I don't know how this works exactly. I'm sure that there's some engineer out there who's sitting there like, Chuck, you can't just buy steel and store it forever. There's probably, some reason why you can't do that also. But I don't know. We got a strategic oil reserve. What's wrong with the strategic steel reserve? Canada's got a strategic maple syrup reserve.
They do, yeah. That's a fair point.
The U.S. has a strategic cheese reserve?
What kind of cheese?
It's
actually, is that what they mean by government cheese?
It's actually where the phrase government cheese comes from.
Yeah.
Let me pull this up here. Cheese.
Provolone.
I mean, that was a pure market-based thing, right?
Hold on.
There was no...
So, the U.S. government in Missouri has 1.4 billion pounds of surplus cheese.
Are you choosing Missouri instead of Wisconsin here?
Middle of the country. You can probably ship it from anywhere. So here's what was going on, is back in the 1970s, a lot of people remember the oil, shortage. People don't remember there was a dairy shortage. And so in response to it, what the government did was they intervened with a bunch of surpluses. And so dairy prices ended up falling drastically. So what you ended up with there was that there was all of this extra cheese that got produced. And so by the early 1980s, the U.S. government had 500 million pounds of cheese. And it was, what do we do with this? And there's a great quote here, actually, from, I'm reading about it now. The Secretary of Agriculture, John R. Block, had a... Which, again, is there a better name for a guy who shows up to the White House holding a 5-pound block of cheddar than John Block?
Oh, you can't make that up.
He said, he tells reporters, quote, "We got 60 million of these that the government owns. It's moldy, it's deteriorating, and we can't find a market for it, and we're looking to give some of it away." That's how the phrase government cheese was actually born. And so you now have, as of 2019... the government had 1.4 billion pounds of cheese just floating around. And the reason why is because we've still been subsidizing cheese production, even as American milk consumption has dropped from 275 pounds per capita in 1975, which is insane. It's almost a pound a day per person. Down to 149 pounds per capita in 2017. Remember, that's all milk product, not just cheese. So there's over 1 billion pounds of cheese that we have. So why can't we get some steel?
Got it.
We probably have one of those too, and I just don't know about it. Let's take a quick break. We got trivia coming up next.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
Thanks to dedicated members across the nation, the DAV programs are far-reaching and the personal rewards fulfilling. Our members are diverse in their interest, which is what has made the DAV so successful. Foremost in our hearts is the goal of assuring benefit entitlement and compassion for our disabled veterans. For more information, visit davma.org. That's davma.org.
Beneficiary planning and asset protection go hand in hand, but leaving everything to your kids can be problematic. Call Cushing & Dolan at 866-848-5699 and get their new guide called How to Leave Assets to Your Beneficiaries. Don't leave your future or your children's future to chance. Call 866-848-5699 or request it online from our website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
If you're one of the millions of Americans at or nearing retirement age and you don't have a solid plan, it may be difficult for you to enjoy your retirement years. Hi, this is Chuck Zodda from the Armstrong Advisory Group, and I've got some questions for you that may offer some guidance as to whether now is the right time for you to retire. Can you retire? Do you have enough money to live the way you'd like to? Should you retire, or have you exhausted your time in the workforce? Regardless of the answers to these and other questions, our new guide called Preparing for an Upcoming Retirement can provide some insight that may help you make the right decision. Call 800-393-4001 to request your free copy of the guide and get a head start on building your retirement plan. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange Quick Tip of the Day. And today we're talking about your brand new guide, Todd, How to Leave Assets to Your Beneficiaries. Todd, why can't you just add your kids to your accounts or to your house deed?
Well, you can. It's just not a good idea. So people who do that understand with an account, right? You can put a joint name on the account. Now, that doesn't actually complete the gift because you actually have to take the money out and then the gift is complete. But when you set it up, yeah, the asset would avoid probate. But if something happens to the child, it's going to be, available. Half the asset would be subject to the children's creditor. So you don't want that. And secondly, if you only put one kid on the deed, you've likely disinherited the other kids. So it's not really good planning overall. Whereas if you put the house in the kid's name, now you've actually made a completed gift of half the house and would need to file a gift tax return. Number one. Number two, of course, it's exposed to the child's creditors and, yes, divorces. You could find yourself at some point owning half your house with an ex-in-law. Not sure that's a good way to plan. So please, put together trusts. Don't just throw names on deeds or on bank accounts because, as I always like to say, nothing good comes from giving assets away while you're living.
The estate planning experts at Cushing & Dolan have been helping families like yours for more than 30 years, and they've written a brand new guide called How to Leave Assets to Your Beneficiaries. To get your free copy of this comprehensive guide that will help you determine the best way to leave assets to your family, simply call 866-848-5699. That's 866-848-5699, or you can request it from their website, LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
Trivia is brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m., including half-price boneless buffalo wings, half-price spinach and artichoke dip, and half-price warm pretzels dipped in beer cheese. Gather with friends any day of the week at Applebee's and say hello to half-price appetizers served late night because half off is just more fun. Now that's eating good in the neighborhood. Void where prohibited, dine in only. Well, on this date in 1775, the opening battles of the Revolutionary War took place in Lexington and Concord. Which side fired the shot heard round the world is still unknown. That phrase would be popularized in an 1837 poem called the Concord Hymn. Trivia question today. Which American poet coined the phrase shot heard round the world? Once again, which American poet coined the phrase shot heard round the world? Be the third person today to text us at 617-362-1385 with the correct answer. And you win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text, and we'll give away that Applebee's gift card in the next segment. 617-362-1385, and the third correct response will be our winner. See complete contest rules at financialexchangeshow.com.
Do you think that Bobby Thompson has to pay had to pay royalties to them on that? You got
I don't
Bobby
even know
Thompson,
what you're
the shot
talking
heard around the world, baseball, 1951 National League pennant.
Not familiar.
Okay, I guess we're not big New York baseball Giants fans.
Nope. I did hear a interesting baseball story. There's a former Atlanta Braves player that played like 42 games, and he needed 43 days on the roster to get a pension, and didn't get there, and has been dealing with like homelessness and all sorts of issues. And there's a big petition right now for the Atlanta Braves to put this 60-something-year-old on the roster for a day so he can get a pension.
Interesting.
I like that.
But no, the shot heard around the world. So 1951, the National League pennant race.
The
Giants were trailing the Dodgers by a cajillion games in July. They won 37 of their last 44 games in order to tie up the standings. And remember, back then, only the league winner went to the World Series. And so the shot heard around the world was Bobby Thompson hitting a walk-off home run in October of 1951 to win the National League pennant and send the Giants to the World Series.
Got it.
I just wanted to know if he had to owe royalties on it. The answer is
Good
probably
question.
not.
Likely not.
Archduke Ferdinand also
shot heard around the world.
You can make the case that one
a little bigger.
Well, I don't know if it's bigger. I mean, here's the thing. The U.S. Revolution literally changed the course of history in a way that probably Archduke Ferdinand's assassination did too. It's hard to say which one of those is more impactful because one led to the downfall of the British Empire. The other led to, indirectly, basically every major conflict in the 20th century. I don't know.
I thought you were asking which one was bigger, Bobby Thompson's hit or Archduke Ferdinand. So that one was fairly obvious.
Oh, it was obviously Bobby Thompson. Come on. They bet against the dollar. Now they're paying the price. So, story here is people were betting that the dollar was going to weaken because of pending interest rate cuts. U.S. economy strengthened, and a bunch of investors are now losing their shirts on this.
Yeah, especially a lot of this was on the Japanese yen, and in that specific instance, you've had it kind of go. Well, it was looking like Japan was going to be the one hiking rates and doing all this, but in fact, now you have the United States in a far more dramatically inflationary period than pretty much any other nation out there at the moment, any developed nation out there. And so if you were betting on rates coming down and therefore dollar depreciating, that story has been reversed, just like any other trade against interest rates this year.
It's hard for me to find an area of the market that is harder to trade successfully than foreign exchange.
Oil.
Maybe they're so intertwined, quite honestly.
Yeah.
But I think that the best advice that I have on FX is unless it's actually your job and someone else is paying you to do it, you probably shouldn't be doing it.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
Beneficiary planning and asset protection go hand in hand, but leaving everything to your kids can be problematic. Call Cushing & Dolan at 866-848-5699 and get their new guide called How to Leave Assets to Your Beneficiaries. Don't leave your future or your children's future to chance. Call 866-848-5699 or request it online from our website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Preparing for an Upcoming Retirement. Mike, what kinds of things do people need to look at to know whether or not they can undertake a successful retirement?
Yeah, I mean, first steps first, we talk about your income sources in retirement versus your expenses. And usually the easiest thing today is to look at what are my income sources now, how will they change, and what are my expenses now, and how are they likely to change. On the expense side, oftentimes it's not that big of a change, but I think that's the first starting point before getting into more complicated things such as my investment portfolio, my health insurance situation, or Social Security strategies.
Mike, a lot of times people are concerned about whether they have enough to live all the way through retirement, and so they might delay their retirement significantly. But it's also worth pointing out that sometimes the biggest risk is not retiring early enough, and you might miss out on some retirement years that way.
Yeah, I mean, look, we all do get worried about longevity, and there are plenty of warnings out there in the media about how Social Security or these other things might not keep pace. But man, it sure is devastating to see the opposite one where you work your whole career, work your tail off, save all this money, and it can impact your health. It can impact all sorts of things. And to not get to enjoy that full retirement because you choose to work longer than you might have needed to is so much more frustrating.
Our guide this month is titled Preparing for an Upcoming Retirement, and there are two ways you can request it. The first is by calling 800-393-4001. The second is by going to armstrongadvisory.com. That phone number again is 800-393-4001, or you can visit armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is now available on your Alexa smart speaker. Ask to play the Financial Exchange and catch up on anything you might have missed. This is the Financial Exchange Radio Network.
Trivia question today was, which American poet coined the phrase "shot heard round the world"? That would be Ralph Waldo Emerson. Emerson wrote Concord Hymn for the dedication ceremony of the Battle of Concord Monument. Emerson took inspiration from his grandfather's experience witnessing the Battle of Concord from his house. We have two winners to announce today. Winner of the Financial Exchange Show t-shirt was Doug from Northborough, Mass. And the weekly winner of the $100 gift card to Applebee's was Matthew from East Boston. So congrats to both winners there. And trivia is brought to you by Applebee's. Choose from a variety of half-priced late-night appetizers after 9 p.m. because half off is just more fun. Now that's eating good in the neighborhood. Void where prohibited. Dine in only.
Mike, there's a piece here on money market funds, and the headline is, "They look like a tempting place for your cash, but don't make this mistake." Good clickbait headline. But
it is a good clickbait
what's under
headline.
the hood?
The mistake, I think, is not the one that most people are thinking of. They're like, oh, money markets go bust, or they don't have FDIC insurance, which, could all be true. Most money market mutual funds don't have FDIC insurance, and they could go bust. The mistake that they are talking about here is that for the last, when did rates start moving? 2.5 years?
Yeah.
Money markets have been the place to be because, if you've held long-term bonds or long-term CDs, then you just had to wait until those come due to go reinvest them into a higher interest rate, and instead money markets have just been climbing. The presumption is that some point, even this is being challenged these days, but at some point rates are likely not as high as they are right now. Sometime in the future. Most people thought it was going to be earlier this year. Now we're kicking that back to even as late as 2025. And the problem with money markets, as you probably realize, is that those rates have no long-term guarantee. They're mainly made up of securities that mature in the next 7 days. And so at some point, if you're the problem that you might have is if you are lining up your expectations with, hey, this money market is paying 5.5%, and I'm going to be getting that for a long period of time, that may not prove to be the case, and in my view, probably won't be the case. And so the message here is quite simple, which is, understand when you are lining up your investments with your obligations, what time frame you are operating on. I think that's the really important thing. Whether you're talking about stocks, bonds, cash, having these different buckets lined up so that they are working for you in the right way depending on when you need them is a really core strategy to investment management and investment planning and just general financial planning. If you are trying to figure out, hey, how am I allocated? What do I do with my cash? How do I approach this in my own financial scenario for my own retirement? I want to make you aware of 2 resources. One, the Armstrong Advisory Group has a brand new guide out in the month of April on preparing for an upcoming retirement, and we address a number of the things that I've been discussing. But 2, if you just have general questions and want a second look at your own financial strategy, call the Armstrong Advisory Group. We're going to provide you a copy of this guide and also provide you the opportunity to sit down with one of our financial advisors located in any of our offices throughout New England. Phone number is 800-393-4001. You can also request that guide or request an appointment online at armstrongadvisory.com. But that phone number, once again, is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Let's see. We were going to talk more about interest rates, but
I'm done.
We're good.
Done. We talk about those a lot. Mortgages, nah. Social Security, boring. Cigarettes. So 1960.
Could use one.
Corporate America knows we're miserable. Is a toilet bomb the answer? Mike, what's a toilet bomb?
More. I thought it was, lighting an M80 and throwing it in the toilet.
Right. We've all been there.
Clorox and Procter & Gamble are saying, no, that is not what a toilet bomb is anymore.
It's not when you get Chipotle.
Jeez. No. In fact, a toilet bomb is similar to a bath bomb.
Okay.
And we're trying to get Americans excited about cleaning their toilet. Do you know what a bath bomb is to start?
I do, but I wish I didn't because I feel like this is just rebranding of stuff that smells.
Yeah. I've heard of like a bug bomb or something, or a flea bomb, or whatever.
You don't know what a bath bomb is?
No, I've never heard of any of these bombs.
So a bath bomb, you toss in the bath and it disintegrates, and your kid gets all excited because sometimes there's a toy in the center of it.
It's like bubbles?
Yeah. It smells.
It's like it's a solid, usually orb of scented, disintegrating stuff in water. That's what they're going to sell to, I guess, stay-at-home mom and dads who need to clean the toilets to get them excited about it?
Well, this article takes a few twists and turns here. Because the headline is, again, corporate America knows we're miserable. Is a toilet bomb the answer? The second paragraph kicks off like this. In January, Procter & Gamble declared romance and desire its scent of the year and bequeathed it to anxious Americans in the form of new Febreze air fresheners with a fragrance of pink rose petals and champagne spritz.
Ooh. Which, by the way, if I'm feeling depressed and miserable because I'm disconnected in a post-pandemic world increasingly shaped by technology, which is how the first paragraph ends, being reminded of romance and desire is going to make me more miserable.
So, I guess... Yes. First of all, and then I was like, okay, so you're going to put something that smells like romance and desire in the toilet, which doesn't make much sense either.
Well, I think that this is going to
just light a candle.
This is going to go permeate throughout all of their products. So whether it's your toilet or perhaps your laundry detergent, it's all going to smell like pink rose petals and champagne spritz, which is apparently what romance and desire smells like.
As part of what Clorox calls a consumer...
Which far be it for me to contradict. I don't know what romance and desire smells like either.
Yeah. As part of what Clorox calls a consumer-obsessed approach, staffers started using artificial intelligence tools last year to scan digital media for new ideas. First problem, taking what people say on Twitter seriously.
Yep.
The foaming toilet bomb going on sale next month nationwide is its first product from this initiative. They might need to work on the name.
Foaming toilet bomb.
It doesn't sound like something I want to buy except as a gag gift.
Yeah.
You know?
Yeah, first thing you think of is a cherry bomb. Yeah,
like,
exactly.
This is what you buy your best friend before a bachelor party. The foaming toilet bomb.
That smells like roses and
champagne spritz. In recent months, the team noticed growing grumbles about cleaning the toilet, along with more social media posts featuring autonomous sensory meridian response, or ASMR, a tingly feeling some feel when exposed to certain sounds, with amped up sounds that are meant to be soothing. Some of these videos include the satisfying click when a box closes or the fizz of a bath bomb in a tub full of water, which was also an inspiration.
You know, we could be wrong about this, Chuck. Maybe this is what Americans need, is fizzing toilet bombs.
That smelled nice.
Mike, I gotta say, we talked about the shot heard around the world previously. Paul Revere is rolling over in his grave that this is what we're doing with freedom.
No.
We're building the foaming toilet bomb. In 250 years, we've gone from one if by land, two if by sea, to the foaming toilet bomb.
I think that there are plenty of now dead Americans who would be proud to see how little conflict there is that Americans can get distracted by foaming toilet bombs.
The foaming
Look
toilet
at how
bomb.
far they have come. They don't need to worry about feeding their family. They're worried about a foaming toilet bomb.
Well,
that's the good news.
I would rather, do you remember when KFC came out with the Double Down? Which was the
chicken cutlets as
bread?
the bread
around the bacon?
Yeah.
That's what I want to see more of.
Yeah.
That's what I want to see more of,
Less
not the
carbs.
foaming toilet bomb.
See, I don't know. I think that this might get my kids excited about cleaning the toilet.
Let's take a quick break here. When we come back, we're joined by Paul LaMonica from Barron's talking about Tesla.
Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play the Financial Exchange. This is the Financial Exchange Radio Network. Beneficiary planning and asset protection go hand in hand, and Cushing & Dolan, the experts in elder law and taxation, can help make your planning process smooth and easy. Simply saying you're leaving everything to your kids isn't as simple as it sounds, especially if they have problems of their own. If you're retired or nearing retirement, it's time to consider the best way to keep your assets in your family while avoiding significant financial consequences down the road. Call Cushing & Dolan right now at 866-848-5699 and get their new guide called How to Leave Assets to Your Beneficiaries. You'll learn which paths are the safest when it comes to protecting yourself and your children while avoiding unnecessary risks that can cost you dearly in the long run. That number again is 866-848-5699, or you can request it online from our website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Millions of Americans are preparing for retirement, and if you're one of them, making sure you have a solid plan is the key to enjoying your later years. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and I'd like to ask you two simple questions. Can you retire, and should you retire? Our new guide is called Preparing for an Upcoming Retirement, and in it, we'll discuss strategies that can help you answer these questions and others so that you can make the right decision for you and your family. There are many different elements to a sound retirement plan, including knowing how much income you'll need to live comfortably, when to take Social Security benefits, and understanding what financial risks might be worth taking. Get your free copy of our new guide, Preparing for an Upcoming Retirement, by calling 800-393-4001, 800-393-4001, or you can request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
Beneficiary planning and asset protection go hand in hand, but leaving everything to your kids can be problematic. Call Cushing & Dolan at 866-848-5699 and get their new guide called How to Leave Assets to Your Beneficiaries. Don't leave your future or your children's future to chance. Call 866-848-5699 or request it online from our website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Ladies and gentlemen, the weekend.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. Visit the U.S. Virgin Islands and enjoy your next incredible vacation. Explore St. Croix, St. Thomas, or St. John. Enjoy pristine beaches, world-class dining, and fall naturally in rhythm with the heartbeat of the islands. There's no passport required or money to exchange. Go to visitusvi.com and book your trip today. That's visitusvi.com.
As promised, we're now joined by Paul LaMonica from Barron's, and we're talking Tesla with Mr. LaMonica. Paul, how you doing today?
I'm good, thanks. How you guys doing?
We're doing well. Tesla stock down 39% plus this year. What seems to be the cause of the problems for them?
Yeah, I think there are legitimate concerns right now about what Tesla's earnings and revenue are going to look like in a world where it seems like many electric vehicle manufacturers around the globe are cutting prices, and Tesla has done that in some markets as well. I think there are worries that demand maybe hasn't peaked just yet, but could be waning. And you look at a company like Toyota that has made a bigger bet on hybrid as opposed to going all in on EVs, and they're doing quite well. So I think, the woes of the electric vehicle industry are clearly hurting Tesla because Tesla is still the market share leader.
When we look at the data that we're seeing on EV sales, last year it seemed like there was a slowdown that was happening. This year, from what I've seen for Q1, it actually looks like we're kind of hitting more of a plateau here. So this is not something that's unique to Tesla. This is facing all manufacturers at the moment, correct?
Yeah, this is definitely not a Tesla only issue. The problem is that Tesla obviously is a company that has a market valuation that is so much higher than all traditional automakers, which has led some people to wonder, should Tesla really have a PE multiple that is so far in excess of what you would see from Ford and GM and Toyota and Volkswagen and all the other leading traditional auto manufacturers out there. I mean, yes, Tesla does a lot of things outside of the automotive industry that I think people are wondering, just how much value does that really add to the stock? But, this is a company that, Elon Musk really wants Tesla to be a leader in EVs. And, that might, unfortunately for investors, require more price cuts if the business becomes more competitive.
The next big thing that Elon Musk announces is always, a major focus for Tesla shareholders and for the market, quite honestly. And they've got a robo-taxi unveil scheduled for August 8th. Now, this is something that Musk has talked about previously is, hey, I think that we'll be able to have this, I think it was by 2018. I think he said there'd be 1 million robo-taxis driving around the United States. How much stock do you think investors are going to put into this announcement in August, given the lack of track record on delivering on these specific types of promises?
Yeah, I think that investors clearly have come to the realization that Elon Musk, to his credit and sometimes his detriment, is a very visionary CEO who talks a lot of big talk, if you will, hypes things up. And sometimes there's the nitty gritty of those little details about actually delivering on deadlines that he doesn't often hit. And I think that investors will be excited about robotaxis. I think that there's a certain element of investors that, is very excited about the promise of, full, FSD, full service driving as well. But it's all, the details. When will these taxis actually hit the market? When will we start seeing them? Who's buying them, what fleets are buying these robo-taxis, and just what the revenue stream is going to be. And that will ultimately be what drives Tesla stock. I think if Musk can deliver beyond August and we start to see some orders and legitimate revenue, I think investors will be excited, and they probably should be. I mean, people that have doubted Elon Musk so far have largely been wrong, even though there's volatility in the short term with, Tesla stock. I mean, Tesla stock obviously down a lot this year, but anyone who invested Tesla, a long time ago when it first went public, they're not complaining.
And this is one of the other things that I do always make sure to point out on Tesla is, look, their profit over the trailing 12 months is $15 billion. Toyota, who does sell way more vehicles, has profit of $31 billion. So it's not like Tesla is losing money. They're actually a very profitable car company. It's just the valuation that may have gotten the shares into trouble prior to this year.
Exactly. And I think this, Tesla is a perfect example of what we've seen with so many other market leaders, particularly the Magnificent Seven in tech. The big difference between 2024 market froth in 1999 is that it really is about valuations maybe being ahead of themselves, not companies that were not really viable businesses getting a lot of hype and not making any money. Tesla is insanely profitable right now. NVIDIA is a very profitable company. It even pays a dividend. I mean, this is not, NVIDIA is not a .com from the late 90s where we're going to be talking about, years from now. Oh, remember NVIDIA and it went out of business in 2030? I mean, this is a legitimate company with a very strong market leadership position in AI. It's not going away anytime soon. It's just, does it deserve a multiple of 35 times earnings? That might be a little high, but again, hey, 35 times earnings is not Cisco trading at a triple-digit multiple in the late 1990s, early 2000. And, Cisco's still around, but it's, not nearly as high of a stock price as what it was during the dot-com bubble.
Paul, thanks so much for joining us, and have a great weekend.
Thanks a lot. You too, guys.
That's Paul LaMonica from Barron's talking Tesla. Mike, what do you got for me?
A good reminder as the New England area prepares for both the Celtics and Bruins playoff runs. The Boston Police Department putting out a warning on not buying counterfeit tickets because they are out there in force. They remind people to try and purchase tickets or only purchase tickets from verified, authorized ticket agencies. And the Better Business Bureau provides the following tips. Ensure the website the tickets are being purchased from is not a third-party knockoff. Use a credit card that may offer scam protections to make the purchase, and do not make the payment with a money transfer app or gift card. And then also, the best one on this, ignore a deal that sounds too good to be true. That's all I got.
You don't have to ignore it. You can listen, but just realize it might be too good to be true.
Yeah.
Probably is.
Probably see a lot of scams on Facebook Marketplace, I'd imagine.
Yeah, very likely.
They don't have physical tickets anymore, though.
It's all, if anyone's trying to sell you a physical ticket to a playoff game, they do not exist anymore for the Bruins and the Celtics.
Yeah, trust me.
Yeah, so that should be an easy one to spot.
Yeah. It's, you got to watch out for those. I don't even know how that would work for scalpers now. Like, do you have to be like, okay, what's your phone number? I'll transfer them to you?
Venmo, yeah.
I haven't scalped a ticket from someone.
PayPal.
I don't even know how that would work now. You got to give the ticket scalper your phone number or your email address?
And Soch.
Feels uncomfortable to me.
Got you on the double scam.
Let's take a quick break for the weekend. We'll see you back here on Monday. Have a fantastic weekend, everyone.